Hello and welcome to our weekly look ahead at the markets. And over the last few days we have seen some volatility coming back into the stock market with some 1% plus type moves on the S&P and the FTSE, the DAX and so on. So some volatility is creeping back in, realised volatility. We have also seen the VIX move up a bit as well. We saw gold and oil moving higher on a kind of geopolitical risk premium. Gold hitting its highest since August, and oil nudging up above that $90 mark before retracing somewhat. So it has been a bit of activity, and really chiefly driving this, of course, is what's happening in the Middle East. But also we're seeing the macro picture playing out, and really kind of as expected, with bond yields continuing to nudge new multi-year highs. And we saw that 10-year US Treasury yield around that 5% mark last week. So we'll be looking to see what sort of data is coming out in the next few days that might change the narrative on bond yields, and what might continue that narrative. So in the days ahead, we have some earnings coming up. We have about a third of the Dow. I think there's 10 Dow companies reporting this week, so we'll be keeping our eyes on that one. That's going to move that USA 30 index. We had Netflix and Tesla last week. Tesla was a bit weaker than expected. Margins actually at their weakest since 2017, and income down 22%. So there's a big decline there for Tesla. Elon Musk saying that Cybertruck basically sunk them. Also warning about interest rates. He's complaining about higher interest rates. Now, this is not really, I don't think, so much a case of high debt levels for Tesla. It's basically debt-free and has a lot of cash on hand. So I think the main thing for Tesla is more about the impact on the consumer, and simply that taking out a loan to buy a car, taking out credit to buy for large purchases is proving tougher. And we've got that 20-year high 8% level on the US 30-year mortgage, indicating just how tough things are for consumers to make big purchases. And these big purchases are what we're looking at there. On the other side of the coin, on the other end of the spectrum, very small regular purchases such as Netflix subscriptions, and they are doing very well. So the consumer is holding up very well. They're not trimming their subs to Netflix. Why bother when it's only about $15 a month for your premium subscription versus $30,000, $40,000 for a Tesla, whatever. The point is, subscriptions at Netflix doing better, up 9 million, above the 6 million expected. 1 billion views of Suits, nothing to do with Meghan Markle, I'm sure, but Netflix doing quite well. So maybe some positivity around some tech earnings. We do have Microsoft, Alphabet, Meta and Amazon coming up this week. Also Snap, so keep your eyes on that. Will be, you know, a really important read for digital advertising spending, particularly from Alphabet and also Meta. Again, also Microsoft looking at that cloud business figures, and again how that impacts Amazon as well. So lots coming out there from these big S&P 500 beasts, as I said. So a third of the Dow, some of the biggest hitters in the Magnificent Seven also due up. So lots on the earnings front. On the macro front, we've got some Japanese and US inflation at the end of the week. The core PCE numbers, we had the Fed Governor Waller warning that they could be ticking up a bit again. He was warning about that last week. Keep your eyes on those PCE numbers. That's going to be very important for this higher for longer messaging around bond yields. Japanese inflation, core is the thing to look out for. It's come down a bit, but it's still averaging way above 2%. So it's, sooner or later, the Bank of Japan is going to have to start to hit the button on normalization, maybe ending negative rates before yield curve control before the end of the year. We're not quite sure on that one, but US dollar yen pairing sitting around at 150 level. Everyone's itching for that one to really reverse if the Bank of Japan starts to sound a little bit more hawkish. And then also on central bank front, we've got the ECB. They seem lined up for a pause. The meeting last time was very much a sort of one and done, dovish hike. We don't intend to do any more. But inflation expectations for 2024 were based on oil being at $82 a barrel. Currently, Brent is trading above that $90 mark. So that might see some resetting of expectations and start to just worry some of the policymakers. But we think very much that this month it will be a wait and see. We're going to wait for more data just remember one thing: we're seeing a broadening of the conflict. We're seeing first Ukraine, now it's the Middle East. We're seeing the multipolar world in action, and that means more inflation and higher rates for longer. And we actually had the Resolution Foundation in the UK saying that the Bank of England should be asked to change its inflation target from 2% to 3% in order to reduce the deficit here in the UK. And I think that's the direction we're heading in: more inflation, higher rates, more taxes. Good luck. Thanks for watching.